Happy Tuesday, February 3rd. We are off to an exciting start of 2026. I want to take today to address a few main questions that really seem to be on everybody's mind these days. So let's start high level and then I will bring it down to the possible action items you may see us start making in your portfolio. Firstly, we are all being fed an incredible amount of information on an almost constant basis, whether it is about AI and if that's good for the markets, or I should be out of crypto and in gold. But bottom line, what most people are really trying to determine right now is, are we still in a bull market? The short and sweet answer that we have to that is we believe, yes, we are. Big picture, there is no sign that we are moving out of that long-term bull market. However, as we have been saying for over a year now, it does appear that the market may be broadening out. So what I mean by that is that the main huge mega cap growth tech stocks may not continue to really charge and lead the way like they have been moving forward. Again, we have been anticipating and saying this for some time now and have been prepared for this. This broadening out is actually a very good thing in our opinion. What we are seeing is that this decade-long trend line of the S&P and large cap growth tech stocks outperforming appears to be seeing some other sectors knocking on the door, like energy, metals, mining, emerging markets, etc., some small cap. And this could be a short-term phenomenon or a possible new decade-long trend line. But what the biggest mistake people make in these times is to overtrade and let human instinct guide their investment decisions. They panic and sell out of short-term laggers and or buy in at highs. Side note, this is part of what happened with gold and silver and caused it to rally. Was a big part of that was the fear of missing out. And that's just not fundamentally lasting, which is why we saw gold down, almost 7% last week or Friday, I believe. Remember, you have hired us to help stop you from making the wrong short-term move at the exact wrong time due to human nature, right? Fear or greed. So before we dial it down on the action items and what you might see us doing, I want to reiterate that we are not going to be making any knee-jerk reaction. We are absolutely not going to aggressively reallocate portfolios. Right now, really the prudent thing to do that we believe is to start making some incremental shifts from a couple of the holdings that have just underperformed recently and been heavily weighted. And this is not just to get defensive, but to raise cash, which will then allow us to shift into some of the other sectors that I just mentioned. So current trends are not on the ropes. Of course, we can't predict the future. And looking at these trends does not by any means mean that the S&P and large cap growth won't continue to do well. We just want to be able to protect, hedge, and then also start to take advantage of future leaders. By the way, if international starts to outperform the S&P, this could happen over a decade. So again, that's just part of the reason why we don't need to make any knee-jerk reactions. We will continue to ride out bumps and invest for the long term. So please continue to keep your long-term perspective. And as always, feel free to reach out with any specific questions or concerns, and hope that you all have a great rest of your week.